They said it could never happen. They said we were delusional. They said silver was a relic of the past, a speculative plaything for conspiracy theorists and doomsday preppers. They told you the price would never break out. They told you the manipulation would last forever. They laughed when we talked about triple-digit silver. And not just anyone, not some small newsletter, not some independent analyst with a blog. No. The prediction you're about to hear comes from one of the most powerful financial institutions on the face of the earth. An institution that manages over $5 trillion in client assets. An institution whose research reports move markets. UBS, the Swiss banking giant, the wealth manager to the global elite, has just released a report that should send shockwaves through every trading desk, every pension fund, and every central bank on the planet. Their official, on-the-record prediction, silver is going to triple digits. Ladies and gentlemen, welcome back to Veiled Wealth. I'm John A.G. What you're witnessing today is not just a price prediction, it is a capitulation. This is the establishment admitting, in writing, that everything we have been saying about silver, about the supply deficit, about the manipulation, about the inevitable repricing, is correct. They cannot hide it anymore. The physical reality has become too overwhelming to deny. And so, they are doing the only thing they can do. They are front-running the trade. They are positioning themselves for the move. They are telling their wealthy clients to buy silver before it doubles, triples, or quadruples. And they are doing it publicly, which means the secret is out. Let's look at the numbers, because they are staggering. UBS is predicting that silver will reach 85 per ounce in the first quarter of 2026. I need you to understand the timeline here. That is not a year-end target. That is not a 5-year projection. That is 3 months from now. $85 in 3 months. And they explicitly state that the price could reach triple digits, 100 plus, this year. But here is where it gets truly explosive. UBS isn't just looking at the nominal price. They are looking at the gold to silver ratio. They are predicting that the ratio could collapse to levels not seen since the 1970s and 1980s. They are talking about a ratio of 30 to 50. Let me translate what that means for your portfolio. And this is just using UBS's own gold target. If gold overshoots to $6,000, which is entirely possible given the geopolitical climate, and the ratio compresses to 30, you are looking at $200 silver. We are not in the realm of fantasy anymore. We are in the realm of institutional consensus. The biggest banks on the planet are now saying what we have been saying for years. The only difference is that when they say it, the money moves. When they say it, the prophecy becomes self-fulfilling. Now, let me be clear. UBS did not wake up one morning and decide to become silver bulls out of the goodness of their hearts. They are not making this call to help the retail investor. They are making this call because the data has become impossible to ignore. They would rather be early to the trade than left behind when the price goes vertical. UBS explicitly cites what they call sustained investment demand. This is the polite institutional language for what we call the flight from fiat. Capital is leaving the paper system. Money is seeking safety in hard assets. The wealthy, the institutions, the sovereign wealth funds, they are all looking at the debt levels, the money printing, and the geopolitical chaos, and they are concluding that they need exposure to assets that cannot be debased by a central banker ES keyboard. Gold has been the primary beneficiary so far. Gold hit all-time highs in 2025. Gold attracted record inflows. But gold is the monetary metal. Silver is the monetary metal and the industrial metal. And that dual role is about to create the most explosive price action in commodity history. While gold was running, silver was coiling. And while gold was attracting safe haven flows, silver was experiencing a supply crisis that the market was ignoring. But now, with China's export restrictions officially in place, that supply crisis has moved from theoretical to actual. UBS specifically mentions that Chinese export restrictions have exacerbated fears of shortages in an already global tight silver market. I want you to focus on that phrase, an already global tight silver market. UBS is admitting that the silver market was already tight before China acted. The vaults were already draining, the deficits were already accumulating. And then China locked the door. They implemented licensing requirements that restrict the flow of refined silver from the world's largest processor to the Western markets that need it. That is potentially 65% of globally available supply being taken offline for the West. This is the recipe for an explosion. This is what happens when chronic deficits meet an acute supply shock. This is what happens when years of paper manipulation collide with the immutable reality of physical scarcity. But let me tell you about a prediction that makes UBS look conservative. Let me tell you what Jim Rickards is saying. Jim Rickards is not some random commentator. He is a former advisor to the CIA and the Pentagon. He understands the geopolitical chess game in ways most analysts cannot comprehend. Jim Rickards is calling for $200 silver, not as a fantasy, but as a logical outcome of the current trajectory. His reasoning is profound. Rickards argues that central banks and sovereign wealth funds are accumulating assets that cannot be confiscated. Think about what has happened in recent years. The US froze hundreds of billions in Russian reserves. They weaponized the dollar system. Every central bank that is not perfectly aligned with US foreign policy is asking a simple question. Could that happen to us? The answer is yes. If you hold treasuries, you hold a liability that can be frozen. But physical gold and silver, stored outside the Western system, that is sovereign wealth. That cannot be frozen with a keystroke. This is why the BRICS nations are accumulating. This is why the de-dollarization trend is accelerating. And silver is the perfect accumulation target. You get the monetary hedge against dollar debasement, you get the strategic reserve of a critical industrial input, and you get an asset that is historically cheap compared to gold. When Rickards says $200, he is calculating what happens when the monetary demand from de-dollarization meets the industrial demand from AI and solar, all in a market where supply is falling. The arithmetic is simple. The only mechanism to balance this market is price. And the price that balances this market is far, far higher than $80. The industrial demand alone would justify higher prices. Silver is the best conductor of electricity among all metals. It is essential for solar panels, essential for EVs, essential for 5G, essential for AI data centers. The net zero commitments that governments have made are silver intensive. You cannot just decide to produce more silver. Remember, 75% of silver is a byproduct of copper, zinc, and lead mining. You cannot just flip a switch. The supply is inelastic. Primary silver mines are rare and becoming rarer. The average ore grade has been declining for decades. The easy silver has been mined. This is the structural supply constraint that no amount of paper trading can overcome. You can suppress the price with futures contracts for a while, but eventually the industrial users show up and demand delivery. Eventually, the solar panel manufacturer needs the actual metal, not a paper slip. We are in that convergence phase now. The vaults are emptying. Now UBS is telling its clients to buy. Think about the scale of this. What happens when the wealthy clients of UBS, the family offices, the billionaires, decide to allocate just 1% of their portfolios to physical silver? What happens when a fraction of that $5 trillion starts flowing into a market with a total annual production value of less than $30 billion? The price explodes. The price gap's higher because there is not enough metal to absorb the demand. This is the beginning of the institutional mania phase. This is when the smart money pile-on begins. This is when the price action accelerates beyond what the charts predicted. If you have been holding silver through the years of doubt, through the years of manipulation, through the years of being told you were wrong, this is your vindication. UBS has just admitted you were right. The establishment has capitulated. Do not sell now. Do not take profits here. Do not trade your position for fiat currency that is being debased by the very policies driving silver higher. The move is just beginning. $85 is not the top. Well, $100 is not the top. Even $200 might not be the top if the ratio compression exceeds expectations. Hold your metal. Add to your metal. Understand that you are witnessing a once-in-a-generation repricing of a strategic asset that the world desperately needs and cannot produce fast enough. The vaults are empty. China has locked the door. The industrial demand is insatiable, and now the institutions are chasing the train. UBS sees it. Commerzbank sees it. Jim Rickards sees it. The central banks see it. The question is, are you positioned for it? Will you be on the receiving end of the greatest wealth transfer in modern history? Or will you watch from the sidelines as silver fulfills its destiny? The prediction has been made. The target has been published. $85 in Q1. Triple digits by year end. $200 on the horizon. The only thing left to do is hold the line and watch it unfold. This is veiled wealth. See you in the next video. Keep stacking.